Airbnb has cracked the code on extracting more profit margin out of basically, let's just call it the real estate market. They figured out a way to do that, and it's creating some pretty incredible numbers for shareholders.
Hey everyone, welcome back to Chipstock Investor. We've been talking a lot about the hierarchy of the economy, how the economy works, products, services, commodities, all of these things. And we've been having a discussion over on our Discord channel about this in light of a company like Airbnb. And so we wanted to share with our viewers some of the discussion we've had around that and flesh that out a bit. Let's talk about Airbnb in this new economy.
Yeah, let's do talk about Airbnb because this is an incredible business. And of course, Booking Holdings, formerly called Priceline, they still own the website Priceline as well. An incredible business over the last couple of decades, highly profitable, and Airbnb really emulating some of the best parts of Booking Holdings and building on that a bit more. We see a lot of potential value in both of these businesses, and especially in Airbnb right now. Here, as we record this, tail end of May, everybody will probably see this at the very beginning of June 2024. So, Casey, we've been talking about this, as you said on Discord, the hierarchy of the economy and how we think about specifically product and service based businesses at the top of the funnel. This is the largest part of the economy, worth trillions of dollars a year in annual spending. On one end of the spectrum, you have mass market, you get lots of volume, distribution is key, but a lot of these products tend to be pretty commoditized. There's not a lot of differentiation between things. You get a lot of competition. And so cost control is key. But on the other end of the spectrum, high-end goods, luxury items, specialty products, this is where you start to get, as you move further to the right, potential for very powerful branding and recognition among consumers. And then along with that, pricing power and higher profit margins.
So we've got like Rice Krispies on the left, Birkin bag on the right.
Maybe not even Rice Krispies, maybe more like cornflakes on the left. I don't know.
Okay, cornflakes.
With the Rice Krispies. At least you get the crackle and pop.
True. Okay, let's talk about the 80-20 rule, the Pareto principle.
Yeah, we don't need to get into this in depth, but this is a very, very generalized principle that's been around for a long time. Whenever you have those mass markets, mass distribution of commoditized product on the left, maybe it makes up 80% of sales. The bulk of those sales don't generate the most profit for an industry. Most of the profit tends to be gobbled up further to the right. And so in this internet era, where it's easier than ever to address the mass market, and the mass market being the whole world potentially, or maybe most of the world, a lot of businesses use the internet and e-commerce distribution channels to attack that sweet spot right there, kind of at the 80-20 rule breaking point, where maybe you're getting maximum distribution for the highest profit margin. And so now we can actually talk about this in regards to real estate, which is essentially where a company like Airbnb and even Booking all fall into the top of the funnel. Real estate as a type of service. So in the traditional economy, if you could get an 8% yield on your property, on your real estate, you're doing pretty good. And yield is essentially this. Let's say you buy a property for $500,000, $500,000. An 8% yield means you're collecting rents at about $40,000 per year, $40,000 worth of annual rental income. That would be an 8% yield, roughly. Oversimplifying this by a great deal, but that's a good traditional real estate business.
Where does Airbnb fit into this real estate market? They have to squeeze out profit margins from those real estate investments. And this is really a pretty amazing business model. Airbnb is trying to turn high-end renters into high-profit, short-term stays. versus falling into that maybe at the most 8% profit margin on a traditional rental.
Now, this may not be completely intentional on Airbnb's part. Some of this might just be being in the right place at the right time. We're now in this spot where a lot of consumers, especially let's say consumers in high priced markets, are beginning to value experiences more than valuing accumulation of things or even having a home. Let's think maybe just for example, a market like Silicon Valley or San Francisco in Central California. Airbnb has this platform where it can basically turn some of those high-end renters and move them into mass market distribution. And so you end up with these really incredibly high profit margins for Airbnb. Just a brief snapshot here to show what we're talking about. In the first quarter of 2024, if you follow Airbnb, you've probably seen this already, just over 2.1 billion in revenue, up 18% year over year. Their platform hitting GAAP net income, very, very robust GAAP net income profit margins, 264 million in the last quarter. Not the greatest GAAP profit margin ever, but you can see they're hitting operating scale, operating leverage starting to benefit, more than double the net income of a year ago. But the adjusted EBITDA, earnings before interest, tax, depreciation, and amortization, and the free cash flow generation, absolutely crazy. We'll get into this a bit more in detail, but the trailing 12-month free cash flow on a trailing 12-month basis at 41%, the 1.9 billion free cash flow on 2.2 billion in Q1, not a sustainable rate. Free cash flow is lumpy from one quarter to the next. But the takeaway, 40% free cash flow margin over the last year. Airbnb has cracked the code on extracting more profit margin out of basically, let's just call it the real estate market. They figured out a way to do that. And it's creating some pretty incredible numbers for shareholders.
I guess the caveat to this is there are some risks to especially consumers, I would say. I've threatened multiple times to never use Airbnb again. And I say this because we personally had some not so great hosts and maybe some very lousy housing for the cost when we were traveling in the past. And so Airbnb really needs to weed out some of these bad actors that they have and focus more on quality of hosts and get back to the root of the reason that this platform exists in the first place, to provide, first of all, a nice place to stay that makes it feel like home wherever you are. And then second, we'll talk about some of those experiences now that they're offering, which is definitely something that more and more people are interested in.
Yeah, maybe just one more risk here, which we've covered before. Last summer, did some write-ups on this, but there's actually some macroeconomic risks as well that Airbnb, and more specifically, those same bad actors that you talked about, Casey, have contributed to, because there's this potential to extract more profit margin out of real estate now because of a marketplace like Airbnb. We already have a low housing inventory problem in some markets. Again, some of those might be like Silicon Valley. Affordable housing is just basically impossible to come by. It's getting worse because some owners taking more houses off the market and turning them into Airbnbs for shorter term stays, creating some of these like regional real estate market bubbles. Kind of sounds familiar though, right? This is what happens with the internet and with social media. We get these viral little mini bubbles that pop up all the time. It's starting to have real world effects, like what happens in the digital realm starting to be reflected in the actual physical, tangible world too. At any rate, let's get back to Airbnb, because if you're a shareholder, if you're an investor, there is a lot to like about the business model. And it's interesting, something that doesn't really get talked about, and that's kind of amazing to us, is this thing called icons. You like what Airbnb has done for real estate and extracting more profit margin from real estate? Well, hey, let's do the same thing with traditional experiences.
Yeah, tell me a little bit more about icons. I saw that this popped up in our Airbnb app recently, and we're familiar with the experiences part where you can book, like, let's say, a food tour or make tortellini with grandma, whatever. But now tell me a little bit more about icons.
This is pretty incredible because they've obviously gone out and partnered with traditional entertainment businesses to make this happen. You're probably going to recognize some of these. Icons instantly loads on the front page now. And you can, for example, book a stay at the X Mansion from the X-Men franchise. Or if you're a big fan of Pixar, you can book these experiences based on the movie Inside Out. If you're a celebrity, you can put an icon listing on Airbnb too and make some money from being who you are as a celebrity. Casey, this makes me kind of wonder, at what point are we going to have a chip stock investor icons listing? And you can hang out with us for, I don't know, what's a good rate? $10,000 a
Free,
day?
free. We're not that
Okay.
cool. Nobody would pay to hang out with us.
No, we're not.
We can barely pay people to hang out with us.
Come have coffee with Casey, everyone.
Anyone's welcome for that. I'll even buy the coffee. Sounds like a new way to increase even more the profit margins for Airbnb, right? So let's talk about their valuation at this point, because the company's had a recent pullback. What are we thinking about valuation for Airbnb after that pullback?
Yeah, let's talk about that valuation, Casey, because here's another risk that we covered again last year. I think the last time we talked about this was in November last year. So we said that we shouldn't expect the same level of gap net income in 2024. Now, if you pull up just a basic stock chart on you Google ABNB stock, and you're going to see, wow, this thing trades for less than 20 times trailing 12-month earnings per share based on a share price of roughly 147, 148 bucks. Now, take a look at this. This is for 2023. About midway down the page there, they have highlighted provision for, or in this case, a benefit from income taxes. Almost 2.7 billion benefit from deferred tax benefits. This is a little trick that a lot of tech businesses can utilize when they're young and when they're losing money. They can accrue some tax benefits and realize those later on to offset their tax bill. Okay, weird stuff, I understand. But the effect of that was 2023 earnings per share skyrocketed. We cannot expect a repeat of that this year. That's what we said. Now, of course, fast forward to Q1 of 2024, tax benefit goes away. Airbnb is getting tremendous gap operating leverage anyways. Big boost in interest income from the cash and short-term investments they have on balance certainly helps. So earnings per share is still going up. This is nevertheless one risk. The big tax benefit from 2023 is going to fall off later on this year. And so simple price to earnings are maybe not a great metric to use in valuing Airbnb stock at this point.
Instead of focusing on that, we can focus on free cash flow. You can see that Airbnb's free cash flow has increased 21% year over year to $1.9 billion. Now, we do expect that free cash flow on a quarter by quarter basis will continue to be a bit lumpy. However, if you focus on a year's time, their annual free cash flow, that is a very solid metric at this point. Shares are currently trading for around 23 times trailing 12-month free cash flow. And then let's talk about those stock buybacks.
Yeah, you can see a massive amount of stock continues to get repurchased, 750 million worth in the last quarter. We said Airbnb taking a page from Booking Holdings playbook over the last couple of decades. These are such incredibly asset-light businesses. In fact, you can see on this particular quarter, there is zero CapEx, no capital expenditures whatsoever. Now, whenever you have a company like this where there's no CapEx, there's no hard assets to back the business up to speak of, versus a traditional real estate business or even a traditional entertainment business that has, at the very least, intellectual property, some sort of brand that people gravitate towards, like Disney and their IP, for example, or even a celebrity and their persona is kind of their IP that people might gravitate towards that they can make money off of. Airbnb's only IP at this point is brand recognition, but no CapEx. What they're able to do with that by generating these massive amounts of cash from people booking properties on the platform and booking experiences, and now these icons that just got rolled out, stock buybacks. This is just an incredible cash return to shareholder story that's really still just in the very early innings.
We think this analogy is very appropriate. Airbnb and Booking Holdings are to travel as Meta and Google are to advertising. When you think about travel, you are most likely going to be using something like Airbnb and or Booking. Same with advertising. Meta and Google are synonymous. And that's why ultimately we have Airbnb in our portfolio and continue to nibble on this stock.
Yeah, that's right. And we're not minimizing the risks here. As you mentioned, Casey, there are some growing pains for Airbnb right now because they have been removing some of the bad listings off of their platform. So that is going to potentially throttle growth. They also have some issues with affordability on the platform as well, which is why we think maybe a duo approach makes sense. Don't focus just on Airbnb. Booking Holdings still very much not a fast growing business anymore. High profit margins and massive share buybacks. Don't underestimate the power of that over the long term, especially when a company like Booking has been able to sustain that practice for many years now. Maybe a duo approach of both of those stocks, like a lot of investors, us included, do with Google and Meta. You don't need to pick one as a winner, maybe just own both. This doesn't need to be a binary decision where you choose one and forget the other. That said, we think these companies are worthy of attention because travel and experiences have emerged as a secular growth trend. In the previous 2 decades, migrating travel over to an online booking format was kind of the secular growth trend. Now we've hit this new patch in the economic cycle where people just want to travel more. And so these are great businesses to invest in if you believe that trend is going to continue for a long time.
Yeah, I think a lot of people are still in pandemic revenge travel, or maybe even just this thought that maybe something like that could happen again where you can't travel. And that was a very difficult time for everyone. So we can see that
Indeed.
continuing. Okay, that's a wrap on this coverage of Airbnb. Make sure you have hit that subscribe button and make sure you don't miss a video. Check out our subscription membership in the link below in the description. Semiconductor Insider gets you all kinds of cool stuff like Discord access and video notes, manuals, and the like. We'll see you all again very soon at Chipstock Investor.